right, and we begin with developments on the money market. Interest rates fell significantly in just a week. Yes, you heard right, from about 24% to 19% from the last Treasury Bills auction. We want to hear more on this latest development in this report.
From a high of about 35% a week ago, interest rates on the short-term securities have dipped significantly on the yield curve, whilst the 91-day bill yield has also fallen by 16%. That of the 182-day bill has plunged by about 13%, going for 22.8%. The 364-day bill has also dropped by about 9% to 26.8%. The significant fall in the yield of the T-bills means government will further save interest costs. Last week, government saved about 220 million cedis from the reduction in T-bill yield. Analysts and market watchers expect the rate to come down in the coming weeks. Meanwhile, the government got about 4.20 billion cedis from the sale of T-bills, about 74% oversubscription. It, however, accepted 3.31 billion cedis of the total bids.
Well, let's get more now on this. Joining me on Zoom is Head of Trading at Republic Securities, Patrick Edemagama, on the latest from the money market. So for those wondering what's been happening in the last few days, tell us, how do you explain the decline in interest rates?
Well, good afternoon, Daryl. Good afternoon to your viewers. Actually, what's happening now is that because there is a lot of liquidity on the market and excess money, investors now are believing that the Treasury bill is the only safe haven now, or the only instrument which is relatively safer, and hence investors have thrown a lot of money to the government. We saw that in the past 3 weeks, investors have thrown more than 50 billion cedis to the government, and the government accepted less than half of that. So it should indicate that the government is now having a lot of power to control where the rates are, and I think they are doing exactly that.
So who is benefiting from this, really?
Well, in all, the government is lessening its burden in repaying back, because if you look at the amount of money that is saved just by reducing these rates, it's making it easier for government to be able to pay back in the next 3 to 1 year. If you look at the previous rate on the 91-day, last week it dropped by 1,139 basis points. This week it's dropped by 416 basis points for the 91-day alone. That is quite a huge drop, and this is going to help the government in the near future.
But is it good for the markets generally from an investor perspective?
Well, if you compare, looking at the yield curve, if you compare the current rates to the yield curve, if we are considering the old bonds, you see that this is going to really drop the short end of the yield curve, and that is relatively okay, and because it's going to also affect interest rates in general. But if you look at the new bonds, using the new benchmark bonds to draw the yield curve, you see that it still needs to drop further in order for the market or the other indicators to respond accordingly.
All right, I just wanted to listen to Joe Jackson, who is Director of Operations at Delex Finance. I spoke to him sometime last week about the developments to do with the declining interest rates, and he was essentially asking government to force the rates to drop further. Just take a listen to what he told me.
Well, listen, I'll be honest with you, just a decline of what?
52.5? Yeah.
I thought that was actually pretty good, because the way our bond market was going, if the decline had been 70-80%, I would not have been shocked. It's as simple as that. When the throes of the debt exchange, this person is included, that person is excluded, there's a U-turn. Listen, the way I see things, we just accept it. Listen, we've had a horrendous event. We've had a default in government bonds. We've had a domestic exchange program that created tremendous liquidity, profitability issues for the institutions. At this moment, a decline of 50%, I'll take it. I'll take it.
A decline of 15%. How realistic is that, Patrick? And how long do you anticipate this decline to be sustained?
Okay, if you look at the trend and the level of demand on the market, we expect this to continue. If that government begins to pay the old bonds starting today, we are also going to see excess liquidity on the market. So there's still going to be more demand against the little supply, which is what the government has control over. So we expect this to actually continue, the trend to continue when more money hits the market.
All right. I also want to ask you about how the auction ended last Friday. We've heard about the 91-day yields. How about the other aspects of the market?
Okay, so for last week, the 182-day dropped to 22.8%, decreasing by 370.81 basis points. This was after it dropped by 1,000 basis points the previous week. The 364-day bill dropped to 26.8%, decreasing by 72.03 basis points. We noticed that the 91-day took the huge chunk, recording about 43.2% of bids that were accepted against 27.9 and 28.9 for the 182-day and 364-day respectively. Again, there is increasing demand for the 364-day bill. That is also a clear sign that investors expect the bills to drop, so they are intending to lock themselves for a longer period.
All right, let's switch to the capital market, the stock market. This week, we expect the fine performance from last week to continue. What's the update?
Well, last week, we saw MTN and Total leading the market, gaining some pesos to close at 1 cedi and 6.05 cedis respectively. We expect that to happen again. I mean, actually to continue this week, because the demand for MTN and Total keeps increasing. On the sell side, we are seeing huge offers in Coil and Bank. They dropped a peso each last week. We expect that to also continue. And in general, the banking stocks are actually losing a lot, so it's affecting the financial stock index. But for some time now, we see that MTN is driving the entire market. So currently, the market is experiencing some positives, and we expect that to continue for some weeks.
There's generally some sense of optimism about how the markets will fare towards the end of the year. I don't know if it has anything to do with the successful implementation of the domestic debt exchange program. What do you think?
I think this has got to do with investors initially losing their hope in the fixed income market, so running back to the equities market. However, our market was always dominated by financial stocks, and where this happens like that, we have companies like MTN, Gold, and all those other non-financial stocks getting attraction or some tractions lately. So we expect people to move towards the stock market while the interest rate drops.
Okay, I'm going to ask your thoughts about this other story we are following for you. We are expecting government to pay start paying coupons on bonds that were not swapped under the domestic debt exchange program. I'm going to ask you your thoughts, what you're hearing right now as to the payments. But first, this report from my colleague, George Affe.
Finance Ministry, in a statement on February 27, announced that it will resume the payment of coupon and principals on bonds that matured last month. This was after the initial date was rescheduled due to what the ministry describes as delays in finalizing the settlement of bonds by persons that signed up to participate in the domestic debt exchange program. Sources close to the Ministry of Finance had then argued that the administrative work under these bonds that were swapped demanded a lot of time to ensure that the settlements are done well. That is why it had to push back the payment dates for these old bonds. The new date for paying these bonds is coming at a time that coupon payments on Treasury bills have dropped significantly over the past 2 weeks. Some have argued that it was one of government's strategies to use this domestic debt exchange program to reduce interest payments on bonds and Treasury bills issued by the government of Ghana. However, these bond payments are restricted to maturities and coupons for last month. But for many of these bondholders, will the Ministry of Finance kickstart the process of crediting their accounts at the Central Securities Depository? Well, maybe their fingers are crossed, waiting for their email alerts and messages on their phones.
Patrick, it's past midday. Any news yet?
No news yet. I'm even checking my terminal as we are speaking, but no news yet. And investors have been calling and asking questions about what we expect or what is happening. So we will keep following out until we get something concrete.
What happens if there's a delay?
That's going to dampen the spirit of most investors because, now if you look at the market, the entire market is still yet to recover and trade fully. Investors want to see if the old bonds will be paid, and that's going to create some certainty in the market for trading for both the new and the old bonds. So if this is not paid or there's no news to indicate payment or when it will be paid and all that, that's going to actually dampen a lot of spirits, and that's going to keep the market still.
All right, Patrick Edemagama, Head of Trading at Republic Securities. Keep watching the terminal for us. Let us know if there is any news on the payment of coupons on bonds.